2021. I'm really excited to say that. We did a number of webinars last year, and we're happy to not think about whatever last year was, and we're moving forward into 2021. My name is David Tingstad. I'm the chair of the Business and Real Estate Group here at Beresford Booth. Been here 25 years, and am excited to welcome a number of other members of our team. Thought it would be nice if to kick off 2021, there are a lot of us out there who have ideas to start new businesses, and so thought it'd be a good idea if maybe we had a conversation where we might identify some issues that entrepreneurs deal with to help you give some thought to some things about how you set up your own business, and perhaps we might be of help to you. So I have with us on the screen Jennifer Takamoto, paralegal here at Beresford Booth. Jen, are you there?
Good morning. Yes.
Awesome. I also have Per Oscarrson here. Per, you've only been practicing about 30 years or so, isn't that right?
About there.
Yeah, good. And we hear you great. Eli Yim is with us. Eli, can you hear me okay?
I can hear everyone. Hi, welcome.
All right, fantastic. So we thought we would do this a bit conversationally. I'm a bit of a control freak, so I'm going to control the PowerPoint here, hopefully. Then we'll have a conversation amongst the four of us. And for anybody who's attending, feel free to type in your questions in the chat feature. We'll take a look at it there, and if time allows, we will answer during the webinar. And if not, those questions will be there, and we'll get to answer your questions perhaps after the webinar is over. So with any luck, I will share my screen, and there we are. And so we're going to talk about our issues with formation. And so Jen, maybe I could ask you a question. I just want to get you teed up when we get to formation here in just a second. But the first thing you got to think about as anyone who's starting a business, you have to think of what kind of entity you want to be. Some people don't want to have any entity at all, and for a host of reasons, we don't think that's a great idea. But certainly limited liability companies or LLCs are far and away the choice of entity for the vast majority of new businesses. Some folks want to be a general partnership, and then there's tons of corporations out there. Certainly the longest entity, well, maybe partnerships are the longest entity, but corporations used to be the entity of choice. They are no longer. And then there's different kinds of corporations, S corporations, C corporations. So you need to be thoughtful about which entity works best for you, and there are a host of factors that go in to each one. We could do a webinar for days just on the choice of entity selection. But Jen, talk to me a little bit about this whole idea of formation. If I want to form an LLC or form a corporation, what do you do to get me started? Whether it's with the IRS or the Secretary of State, maybe just to tell us a little bit about what we do and how we think about that.
Yeah, so depending on the type of entity that you intend to use, so if you are forming an LLC, you're going to prepare and file a certificate of formation with the Washington Secretary of State. If you're forming a corporation, you're going to prepare and file articles of incorporation and file those with the Secretary of State. Those will contain all the statutory information that you need in order to form. Once you get confirmation of that formation, then you are technically formed with the state. So your next step could be to get that tax ID number. That's an application that's filed with the IRS. Most of the time, that is an application that can be done online. And then you may move forward into your business license. This is filed with the Department of Revenue. You are going to file a master business license with the Department of Revenue. Depending on your type of business and what you intend to do, if you have employees or not, you may have some other state and city endorsements that will require some additional filing.
So let me ask you a couple of questions. First of all, you mentioned the Washington Secretary of State. Do you have to be in Washington? Can you file in other states? and tell me about that.
You can. So depending on, again, on your business and your needs, you can file for an entity in any state. There may be business reasons to do that. Of course, if you go ahead.
And I'm sorry to interrupt you right there. I just want everyone to know that Jennifer has formed entities in like every state imaginable and other countries, and so she loves doing that kind of stuff. Wanted just a little tidbit there for you. So a tax identification number, is that the same thing as like a social security number, or who do you get that from?
Yeah, you're going to get that from the IRS. You can think of it as a social security number for your business.
Okay.
So that's going to be your tax identification number for that entity.
So with a business license, I mean, is every business license the same? Like if I want to be, say, a real estate brokerage, or an accounting firm, or a machine shop, or a bar, or is it all the same kind of license that you got to get?
You're all of the businesses are going to start the same with that overreaching master business license. Although depending on a few of the things you've mentioned, you might need a liquor license, you might need a managing broker license. So those are going to be some more of those state endorsements that you're going to need to file for as well.
I see. So, and I will tell you, I've been through a number of times the application process. It is not easy to do. There's a ton of information, and so call Jennifer with all your business licensing questions. we deal with these things a lot, and it's very challenging. So Jen, thanks for that. Let's move forward here into a little bit more detail about the formation documents. Per, maybe you could jump in here. I've got the slide that talks about organic documents, and Jen mentioned certificate of formation or articles of incorporation. Tell us about a little bit more of these documents and what you need to think about as you're going through these, and why you would do them in the first place.
So for a corporation, whether it's a subchapter S or subchapter C, the formation is exactly the same, because the formation is under Washington law, and subchapter S versus subchapter C is a question of federal tax law. And the articles of incorporation can be quite simple. Maybe the purpose, the length of time you want to exist. Sometimes people will identify their initial board of directors, but it's not necessary. I'd heard at one time you could create a corporation by filing a postcard with the necessary information on it. I wouldn't suggest that, but it's possible. A corporation that also has bylaws, which kind of give you a roadmap for how the corporate part of it, not necessarily the business part, but the corporate, being the shareholders and directors and officers, how they're going to kind of relate to each other. There's a third one in the corporation's context, at least as part of formation, and there's normally an initial meeting. It could be incorporators, it may be the initial board of directors, where they adopt the bylaws, they elect the officers, they might choose a bank or banks where they're going to have bank accounts. They may make other choices in that kind of a document. But that's really pretty much it for the opening of or formation of the corporation. For the LLC, you've got the certificate of formation, which has very similar information in it to the articles of incorporation for a corporation. It will identify also, or can identify, whether it's member managed or manager managed. And that's then when you get to the LLC agreement, which is kind of similar to the bylaws. It's an agreement among the members about how they're going to operate. And if there are things, for example, where it's manager managed, there may be some things in there that provide what the manager can do without having to get anybody else's consent. But in that case, it probably also has some things that the manager cannot do without the consent of maybe either a majority of the members or a supermajority or even all of the members. For example, adding a new member, that may require all the members to agree. So those are pretty much the basic documents to get the corporation or the LLC formed.
So Pear's identified a number of things there, and it's really critical that as you think of the entity that you're choosing, keep in mind the major differences, and there are major differences between LLCs and corporations. But corporations are a creature of a statute that gives you very little flexibility. It tells you how things are going to go. But with an LLC agreement, and in an LLC, it's a creature of a contract, and there's all kinds of flexibility that you have built in there. But there are default rules that also apply to LLCs, and if you're not careful, you may get stuck with rules that you don't want. And so, Per, is it important to think about those default rules, or think about sort of the way it's going to be unless you change it?
I think it's very important to think about those rules, because as you say, if you don't make the change in the agreement, and there are certain rules you cannot change. The statute says, here's a list of those things you cannot change by agreement. But if you just basically accept what the statute says, you may be accepting something, number one, you don't know exactly what it is, because it's just in the statute. And even if you know what it is, you may not want that.
That's right.
And so if you have the ability to make the change, it's a good idea to go through, here's what the rules would be if we don't change them, here's what we can change, and how do we want to change that if we can change it.
Absolutely. Yeah, I think that's really well said. Well, let's keep this moving along. Eli, want to turn the screen here to you, to a very important subject. You got to be able to fund your new business. We think of that in terms of capital. Tell us what can be capital. Tell us what the considerations are, or some of the issues associated with startup capital or capital to keep the business going. I'll turn it over to you.
Sure. Well, I think part of, one of the more important parts as you go through the formation process is you need to sit down and do the math. So you want to set a budget as part of your business planning. Make sure you're accounting for all your expenses, potential liabilities. Really just make sure you've accounted for everything. And I don't know if this is poor form, but to quote the host here, David Tingstad, spreadsheets are your friend.
Hey, there we go.
and you use the spreadsheet, and then we like to say, and then you double it when you think about initial capitalization or initial contribution. Really, you want to make sure, besides the obvious reasons, that you're not undercapitalized, right? If you're undercapitalized and you don't have enough assets in your company, your corporation, your LLC, you can run into problems with the IRS, or you can run into problems with no longer having some of the liability protection that you think you have if you're undercapitalized. So you want to make sure, for a lot of reasons, that you have adequate capital upon formation. And capital can be cash or non-cash assets. People all the time, may have real property, personal property. You can think about whether, what the right blend is of equity or debt. Equity being, maybe you've got a venture capital, or other private equity that comes in and some ownership percentage in return for that, or you can take on debt, in which case you're retaining your ownership percentage, and you have to make sure you've got cash flow to make payments. But that's another thing to consider, what that right balance between equity and debt is. And so you want to think about all these things. Of course, as you move forward, you want to make absolutely clear you're not intermingling or commingling your funds. Again, that will get you in trouble. So being careful with your accounting and the money. And also moving forward then, if there's a need for subsequent or additional capital, you've got key questions to consider. How much capital, who is the capital going to come from, and when, at what point in your business plan will there be a need for more investment in the company. So additional capital, you really want to think about those key questions, and even think about what happens if for example, you have to default. All those things you want to think about and plan for.
Yeah, no, and that's really well said, Eli, and not just the part about spreadsheets being your friend, but it is amazing to me how many times we take a look at a new business venture where the clients haven't, put that together. The business plan, which we go right to the spreadsheets. Let's understand how those funds work. It's a fundamental part, obviously, of running your business, and there just never seems to be enough capital. So, Eli, I think those are great points. And so once you start running, let's see if I can skip this forward one.
Wait, David,
yeah, go ahead, Eli.
Yeah. Did you just basically say that your favorite part of my presentation was when I quoted you?
Yes, yes. Thank you for that. Throwing me right under the bus there. That's all right. Not the first time, won't be the last. So as we move forward with what we're really talking about here is the life cycle of your business, right? Jennifer and I started by talking about the formation, which is the beginnings, and then Per talked about getting those documents together and the dollars together that Eli talked about. Well, now we're talking about operating your business. You've got the capital, you're running, you're sending out your bills, you're getting things collected, and whether you're a machine shop making parts for Boeing, or you're an accounting firm, or an engineering firm providing services. All right, now we're going to have profit and loss, and so how there are two magic words that are on the screen: allocation and distribution. And so from a corporate perspective, there's no flexibility associated with how you're going to deal with and allocate your income. Allocation is a tax concept. And for a lot of reasons, you may want to have flexibility about how you allocate that profit or loss. As Eli talked about, the people who bring in the capital, they are very serious about how and when they're taxed on that capital contribution, or whether when they're going to get their capital back. And so if you're a corporation, you have zero flexibility on how that's going to work. You have zero flexibility in terms of how your dividends or distributions are going to work. From an LLC perspective, though, it's a completely different tax regime. And so mostly you can allocate your profit and loss by agreement. And there are all kinds of reasons why you would want to do that. And similarly, distributions, you don't have to make them pro rata. If I'm a 50% member, you don't have to make the distributions in that way. And so there's all kinds of reasons why you would want to think about that. And that's surprising to a lot of business owners. So maybe now what we can do, Per, because I know how exciting tax consequences can be, and we're trying to keep folks awake for the entire presentation here, but maybe you could talk just for a quick minute about the differences in management and what you want to think about as you're trying to establish how you want your management to work.
Sure. So with corporations, you typically have a board of directors. If it's a very small corporation, it may be that you could even do away with the board of directors, as long as there's somebody that does that function. And that function is really kind of the strategic overall, here's our policies, and provides the management authority. They then elect or appoint officers who actually carry that out. It could be it should be president, secretary, maybe a vice president, maybe a treasurer. Sometimes more than one office is held by the same person. I've seen small corporations where every office is held by the same person. May not be such a good idea, but at the outset, that may be the only way it can work. The shareholders elect the directors other than the initial directors. The shareholders typically don't have an awful lot of say in a lot of that management because it's being done by the directors. Again, if it is a small corporation, 2 or 3 shareholders, they may also all be the directors, and they may also all be officers. LLCs are a bit different. They can be member managed or manager managed. If they're manager managed, it might just be a single individual who serves as a manager, who may or may not be a member. Or it could be a management committee, which might kind of look to some extent like a board of directors, and maybe kind of a hybrid of a board of directors and officers, because that management committee is the one making those decisions. And there may be officers within the LLC. That's one of the nice things about the flexibility of an LLC. You might have officers that you might think of in a corporate setting, also have the same titles in an LLC setting. And I've seen that done very often, because certainly when LLCs were kind of new, which was several years ago, a lot of people were not really familiar with them. And so they kind of tried to use these corporate concepts, including titles of officers. And I think the reason for that was that people knew, well, generally, what does the president do? What does the secretary do? What does the vice president do? What does the treasurer do? So instead of trying to come up with some kind of new title in the LLC context, a lot of people were using the same kind of titles in LLCs, which may or may not be appropriate, but it's one that has worked. Again, if there's a management committee, there may be someone who is identified as the kind of the, I hate to say spokesperson, because they're more than a spokesperson. You know, in a partnership, they're the managing partner. And when you got a management committee in an LLC, it's kind of hard to kind of give them a title that kind of makes some sense, because you can't say they're the manager, because the management committee is the manager. But they have authority. Maybe they're the president. Again, there's a wide range of flexibility there.
Yeah, that's right. I think that's really well said. We're starting to run a little bit short on time here. Eli, I'd like to throw this over to you and talk about transfer issues and why they matter.
Yeah, it's a really important consideration as you put together your plan for your company. You know, ultimately, we do a lot of work with closely held businesses, and you know, absolutely, people want to choose who they're in business with, and so you know, the pick your partner principle is really foremost on a lot of people's list. Who do you want to go into business with is critical, both at the start and over the lifetime of your company. And so very important that you consider transfer issues. You know, with an LLC, oftentimes we'll see that it requires unanimous consent in order to voluntarily withdraw. We'll see provisions that say there's no voluntary withdrawal. We'll see that pretty frequently. With corporations, you know, really anyone can be a shareholder. And so that's why it becomes important to have something like a shareholder agreement that restricts the transfer of those shares. And so you can have provisions say, you know, no party may sell or transfer or assign their ownership or their rights to the stock, or you can't use it as collateral. All those things that you want to think about as far as restrictions on transferring, voluntarily withdrawing or transferring shares. You want to think about maybe there's a right of first refusal that you want to build into the agreement, where existing shareholders or existing members or the company itself can buy back stock or buy back your member shares or member interest. So really, there's a lot to think about as far as voluntary withdrawal, but ultimately we find that people are most comfortable putting some pretty strong restrictions on that. And then on the involuntary side of things, that would include, you know, death or disability, bankruptcy or insolvency, garnishment, divorce, anything where there would be an involuntary withdrawal from the company. Then you would want to plan for those contingencies as well. Again, people may build in certain rights of first refusal or call options or what have you to reclaim those interests. And even if you allow a transfer, you see also considerations about what would happen if someone is the recipient or becomes a transferee. Do they have the same membership or shareholder interests? Or, you know, in the case of an LLC, maybe that's just an economic interest without becoming a member. You can put those kinds of restrictions there as well. So a lot to think about under transfer issues, and it really is critical under the pick your partner principle that you think about these things.
Yeah, no, totally agree. And this is one I think we see where there's a lot of people overlooking this. Your interest in your business or your business itself is going to come to an end. And Eli, you said you got to plan for this, and you nailed it. That's exactly right. These kinds of things are going to happen. They may not be fun to think about necessarily, but they need to be done, and they're tricky because you're right. With your closely held business, you want to be in business with the people you want to be in business with, and not somebody who you don't know. And certainly, if you don't plan for it, it can happen. So I think that's really well said. So Jen, now let's turn our attention to sort of the end of the business. You and I got this thing started by talking about how we form it, and people get really excited about forming and getting their tax identification number and getting their business license. Maybe not quite so excited about dissolving their business. What are a couple of the things that you think about, or what you have to do to terminate your business in some way?
Yeah, so setting aside any liquidation issues and just talking about dissolution, you are really just filing articles of dissolution or certificate of dissolution with Secretary of State. So similarly, the way you came in was filing that certificate of formation or articles of incorporation. Now you're filing again with Secretary of State to close that down. Yeah, and so from an administrative standpoint, it's important that you end your business, because you can just allow the Secretary of State to administratively dissolve that business. Jen, how does that sort of administrative dissolution work? So that is true in Washington State, although it's not true in all states. But in Washington State, if you do not file your annual report, over time, the state will administratively dissolve you. And that is different than filing a certificate of dissolution with the Secretary of State. Yeah, it's very different. And I really appreciate you pointing that out. It's very, very different because there's no protection from creditors when you simply allow the Secretary of State to administratively dissolve. And so one of the things that we do regularly, and Jennifer does a ton of work with renewing entities. Jen, you mentioned something caught my ear here, your annual report. And I didn't talk about this earlier, but maybe you could just sort of mention what's the annual report and what goes into that process a little bit. So speaking in Washington, so Washington will have an annual report for you to file. You're going to confirm some basic information, your address to governors. The state charges you a fee. That will go in and renew part of your master business license as well. Those two are intertwined. However, you do need to watch out that it doesn't always renew your city license or any other endorsements you might have. But that is a yearly requirement. Yeah, absolutely. And we see pretty regularly where people don't do that, and it can really cause some unintended consequences. So we certainly recommend that you use a professional registered agent. Certainly, we're happy to help with that. And because I think it is a valuable service, and Jennifer spends a lot of time keeping our clients on the straight and narrow. So these are things that you need to think about when you form your business. And certainly, I just want to introduce again everyone to a few of the team members here at Beresford Booth. We've been here a long time. We love what we do. If you could tell, everyone loves to give me a hard time, as Eli clearly pointed out. And so, but we enjoy what we do. We enjoy getting to work with entrepreneurs, whether it's folks who are developing real property, or making their business grow, whatever it is. So please think of us. We're the largest firm in Snohomish County. And like I say, we love what we get to do, and we love to help. So please give us a call. And so next Thursday, my partner, Matt Cruz, will be heading up the webinar on probate issues. So register for that. And we will be here every Thursday at 12:15. For now, that's all I got. Anybody else have anything for the good of the order? We good?
David, there was a question that was raised. I was wondering if I might be able to answer that one.
Please go ahead. I couldn't see the chat, so go ahead.
Yeah, it was Question about whether it's true that a managing member can prohibit other members from making decisions or obligate the LLC on behalf of the LLC. You know, typically, when it's member managed, all the members have the ability to bind the LLC. I think that could probably be changed by an LLC agreement. The problem then becomes, does that third party that the member is dealing with, do they know that this member they're dealing with doesn't have the authority? On the other hand, if it's a manager-managed LLC, the members do not have the ability to obligate the LLC or make decisions on behalf of the LLC because that authority has been delegated to the manager. Again, there are exceptions because there may be some significant decisions that are to be made. But again, that's not to be made by one other member. That's to be made potentially by the majority of the members or a supermajority or all of them. So it is important to know, are you dealing with a member-managed LLC or a manager-managed LLC? And I think it's still risky if you're just dealing with someone who says, oh yeah, I'm a member, and believing that that person has the authority to make some kind of decision on behalf of the LLC.
That's right.
I hope that helps.
Very well said, Per. Thanks for picking that up. I blew right past it. I put on the last slide, plan carefully. Really very true, whether it's spreadsheets or other ways. And certainly we'd be delighted to be part of your plans as well. So thanks everybody, and stay tuned to our next Thursday at 12:15. And we appreciate you guys tuning in. Thanks so much.